Hello. In a previous video, I mentioned that I had an almost one-hit wonder, a second one. That is going to be today's video. My second almost one-hit wonder. So let's get started. Okay, let's dive right in and let's check out the chart. Let's start with strictly the DCA module and demonstrate the actual results. Now this was tuned for a 1 minute time frame, but really can be used on any time frame. As you can see, one position, that's it. Maximum risk, one single position. So if you remember my last video when I talked about the difference between an aggressive and defensive budget, this particular approach can work very well with an aggressive budget, but only if you use a good quality coin with a market cap above 1 billion. Do not use this kind of a technique on a coin that does not have a stable market cap. But if you have a stable market cap, you have a winner. It will do well, and it does do quite significant in terms of handling unusual market conditions. Now this is actually three components. A moving averages, which is a crossover momentum combination, and a stochastic. Let me get to the beginning of this cycle. Now, like all Jackrabbit recipes, this is a optimistic holding position. It is bullish because it believes the market is going to recover. That is significant whenever you deal with any kind of accumulation or holding-based recipe. It is bullish by nature. Okay, so here we go. Let's really zoom in on this particular trade, which looks like a mess, to be honest. So here you have, let's hide the DCA for now. Here you have the momentum, and then you have the crossover, as you can see. So now let's hide the momentum, crossover, and let's look at the DCA module. Comes in, it waits, hits its simple take profit of 1%, and it's out. Nice and easy. Let's look at the stochastic. Comes in, and it sells over here. But it's only used for the entry point right here. That's it. Very simple, very easy, and yet, let's actually go through the settings of the stochastic just so you can see. Very, very straightforward and simple stochastic. Literally cookie cutter all the way. And even the momentum isn't really that great of a big deal, or the crossover. Let's start with the crossover. As you can see, very simple, 37.97, prime numbers. Now we want this inverted, which means we only want to look at certain critical conditions. So when the fast line moves above the slow line, okay, let's get down to our momentum. Standard split channel, 237. Whoops. Let's bring that back up. Momentum is a standard split channel, 237 length. Again, prime numbers. And I'm going to kill my tablet. There we go. Now, if it'll stay here. Very simple. Now, the thing about this recipe, which is unique, is it works well as a one-hit wonder, but you can also set it without a holding parameter, and it will act as an accumulation, but the accumulation is very low, like 5 to 7 positions in most cases. Or you could set it to 5 positions only, and that's all it will accumulate. This is really a very resilient recipe, which I'm going to demonstrate very shortly. So first, let's hide this, zoom in on this. Let's get to the statistics and actually take a look at coins that are above 1 billion market cap. Okay, 4 positions or 4 trade cycles. Five trade cycles, and you'll notice that about 20 days, 17, 18 days. I'm going to say about 20 and round it up just because of unusualities. That's pretty much where this recipe sits. It's about 20 days on just about every coin. BTC. You can see very defensive. 17 days, very defensive, good profits though. Let's actually see where that trade took place. And as you can see, it's holding right now. Again, remember this is optimistic that the market will always recover. So this kind of recipe works either with an aggressive approach for position sizes or with aggregation. Both do quite successful depending upon your trading approach. For example, if you do 1% budget for 20 coins, you're going to stay within 20% of your maximum budget. It's a very easy process and a very comfortable one on your budget. But it does require patience, and it requires understanding your risks, because you could be holding for quite a while. So this is all the way back to the 26th of last month. Now, if you set your relay up to only allow one coin at a time, and you use an aggressive budget, well, this would still be sitting there, and it wouldn't have gone through a lot of the turmoil of the existing market over the last 3 days. I have one coin like that already in my hopper, or in my trading, where I have strictly locked up in one position and it's not doing anything until it recovers, which is fine. Optimistic, bullish, patience, it will recover. So let's see, here is the first actual position that it did. Not bad, basically less than 24 hours. And it did a very nice profit. So let's go check out a few other coins. DOT is typically an aggressive coin to work with. But again, 17 days, one position. It says 2 cycles, or 2 coins per cycle, but it's not. I think that's just a display error, because it's set not to accumulate. Again, this mess we've been going through. Let's get back to the end of last month, since I suspect that's probably where this one sits as well. Now this will work on a wide range of coins. And if you have a very low position size, even some of the weaker coins below 1 billion market cap can be quite profitable, as long as you understand the risks. I cannot underscore the importance of that. You must take time to understand the risks. While this limits you in terms of the number of positions you actually hold, it limits you in terms of your actual exposure rate. It increases in this kind of a situation on the amount of time it takes to actually sell off the asset, because it's not benefiting from the accumulation cycle that would normally give it a better chance to sell off quicker. That could be good or bad. Only you can decide that with your risk assessment. I personally like it because I have found it simply does a good job. I'm going to post this link so you can look at it on your own. But I want to go through some of these coins and show you really just how nice this recipe is. Okay, this is the high market cap coins. Let's go find some of the lower grade coins. Coins that just aren't that great. Coins that probably shouldn't even be on the market, but they are. Here is a coin that is a problem from beginning to end. Band is not that strong of a coin, period. As you can see, 56% loss in value over the last couple of days. Not strong, but yet, even with this recipe, it is reasonably workable as long as you have the patience and risk assessment for it. Let's take a look at another coin. A coin that has a jaded history at best. Okay. Raven. I've talked about this coin and how it is just a royal pain once in a while. Its accumulation cycles are a nightmare. And yet, even with it being such a pain and such a nightmare, only one position, only one cycle. It avoided the whole mess. Now let's see how that looks as we actually go to higher time frames. And we'll see just how well this recipe shines, even with coins that, quite frankly, shouldn't be trusted. So for 45 days, 10 cycles on Raven of all coins. So if you use the aggressive budget measures and you simply wait for recovery, this coin is actually profitable and reasonably well. Let's move to another higher time frame. Now I remember, I built this specifically for the 1 minute time frame. So not every higher time frame is going to perform well for every coin. But overall, I hate to say it, but the 3 minute time frame on Raven, that is something I would personally trade. And I don't like trading Raven because of its volatility and low market cap. I've been stuck with this coin too many times to know just how hard it is to get rid of. But this is something I would trade. It's reasonable. It's consistent. And where's my data? There it is. Here we actually made 2 trade cycles. Let's go up. And yes, you'll notice all my time frames are prime numbers. I did that deliberately because I believe it gives me a better advantage on the market. So as you can see, the higher the time frame, the less likely you're going to get a good number of trade cycles. Let's jump up a little bit. So we pretty much reached the apex of just what this is capable of doing. So let's go back down to the 1 minute. And let's pick another coin that has been difficult lately. Yes, Luna. And the nightmare that has unleashed onto the world over the last few days. I'm going to pick on this coin. Yes, I am. I'm going to eviscerate it for all of its poor quality of not protecting its assets or doing what was necessary to correct its internal bugs. But even as bad as this coin has been over the last couple of days, only 2 trade cycles. That's it. So that's how well of a risk mitigation this system is. Now, no recipe is perfect. No recipe does wonders or could solve any market problem. But through proper risk management, proper budget management, and proper analysis of the coin, you have a good combination that can work well. And this has apparently been going on for quite a while. So that tells you just how limited your exposure is going to be. So let's move up and see if we can figure out where this started. Okay, where is this at? Okay, that's interesting. On the 3 minute chart, it doesn't even get into the market. So, this is real telling. It got in and it got out on, is this May 5th? Yes, May 5th. So on a 3 minute chart, this thing got out before all the mayhem started. Not bad and quite reasonable. Let's see on the 1 minute chart. Okay, it looks like it's in. When did it get in? So the 1 minute chart, it did get in for one position. But the 3 minute chart looks nice. Now personally, when I'm looking at charts, something like this, I would avoid just out of habit. I don't like long runs. I don't mind a few days. I don't even mind a week. But when you start getting into long runs like this, these coins I tend to stay away from on smaller time frames. And this is definitely a run that's too long for my liking. But still, the fact that it is only one position, if I've got a reasonable budget and I'm trading 50 coins, I might put it in as a volatility filler that will be picked up at the very end of all of my other coins. So let's see what other coins are known to be a problem. Let's look at sushi. It's a coin that can be problematic for a lot of people. It certainly seems to have its long-windedness, as this demonstrates, but it made 4 trade cycles in 17 days. That's not bad. Certainly worth waiting for. And that's the important part. Waiting for it patiently. Trading is not fast. It's not get rich quick. It's not get rich overnight. Trading is like a garden. Sometimes you get some really nasty weeds that you just have to deal with. And then you have to wait. But this recipe is a good one, and one that really does well over time. It's something that should be looked at. It's something that should be considered, and it should be part of your overall thinking process when you're looking at how you want to trade. Aggressive, defensive, a one-hit one that's just strictly a holding process can be the perfect way to manage risk on a larger level. Or if you want a little bit more aggression, raise the holding value out of the DCA module, and you can actually limit your risks while still accumulating on small levels. For example, let's move this to 5. Actually, let's take this out completely. Now, let's open this up and really see. Worst case scenario with this mess, what has it done? And as you can see, with no constraints whatsoever, maximum accumulation of 5 cycles. So if you wanted an accumulation approach and you wanted to go really defensive, 200 or 20 maximum positions, $200 at a $1 position, you're good to go. So this gives you the best of all worlds in many ways. But let's see the nightmare, the 1 minute, the hard one. What's it like here? What's it like when all chaos is going on? Okay, as you can see, a little more, but still not out of control, even with the insane market we've had over the last 3 days. Not out of control. That's the important part. And of course, you can control it. You can limit your exposure. You can make sure You stay within a very tight radius. That's what these recipes really excel at. They excel at making sure you have the constraints and controls you want. So four trade cycles. Now let's go back down to one position. So recipes like this are a good example of just how you can control your risks, avoid bad situations in terms of really severe accumulations, drawdowns, and exposures, and still gain the benefit of the market at its best, no matter what the market throws at you. And if anything has demonstrated what the market is capable of doing, these last 3 days certainly have. So, this recipe is just one of many tools. These tools can help you. Look at them, consider them, think about your worst case scenario. Plan your risks out. If you have to worry about what the market is doing on a day-by-day basis, even with the insanity that we've gone through, you've taken on too much risk. Trading, especially algorithmic trading, should be boring because the machine is the one doing all the work. You check it once a day, make sure everything is running the way it should be, and that's pretty much it once you've done all your preparation, planning, analysis, testing, and risk mitigation and budget considerations. So, like, share, pass this video to someone if you know that they need help looking for a proper trading technique, and trade responsibly, trade sustainably. Don't let the fear of the market drive your trading. Until next time.